Professional ethics plays an important role in all areas of accounting, particularly in payroll accounting. The Enron scandal and the subsequent enactment of the Sarbanes-Oxley Act of 2002 brought ethics to the forefront of the accounting profession. Despite the SOX framework, though, the payroll industry continues to face numerous ethical challenges, including fraud and theft. In this video, we'll discuss ethical principles along with examples that will help you understand the consequences of unethical behavior in payroll accounting. Payroll accountants play a critical role in safeguarding the financial interests of employees in the company. Ethical lapses can lead to serious issues such as payroll fraud, overpaid employees, or underpaid taxes. For instance, underreporting hours worked can cause employees to receive less than they're owed, leading to dissatisfaction and even legal repercussions for the company. Likewise, falsifying tax deductions could result in the company being penalized by tax authorities, along with loss of employee trust. The guiding principles for payroll accountants are confidentiality, professionalism, integrity, objectivity and independence, and professional competence and due care. Confidentiality is not just about keeping information safe and secure. It's about protecting individuals' privacy and preventing misuse of sensitive data. A real-world example might involve a payroll accountant mistakenly sending employees' social security numbers to the wrong person, leading to identity theft. Such breaches can cause lasting harm to employees and significant legal consequences for the company. Another example might be when the payroll accountant is asked by other employees about the pay rates of fellow employees or managers. Confidentiality means that the payroll accountant protects that information and does not share it with anyone who should not be privy to that information. Professionalism in payroll accounting means acting with integrity, even when facing personal challenges or workplace pressures. An example of unprofessional behavior could be a payroll accountant delaying payroll processing because they're overwhelmed with their workload, ultimately causing employees to be paid late. This type of behavior undermines the company's reputation and erodes employee trust. The company should plan for these situations and have a backup plan for payroll processing. So when the payroll accountant has a personal emergency, someone else can step in and process payroll. Integrity is the foundation of a payroll accountant's role. It's essential for ensuring that the payroll process remains accurate and transparent. For example, imagine a payroll accountant notices an error where an employee has been underpaid but chooses to ignore it to avoid confrontation or paperwork. This could lead to legal action from the employee, along with severe damage to the company's reputation and trust. Take, for instance, this example. The payroll accountant pays out an employee's vacation time, knowing that it is against policy, but does so because they know that the employee has medical bills to pay for a sick child. Everyone can sympathize with the employee, but this action would violate the ethical principles of integrity because it violates company policy, creates legal issues, and erodes trust. In addition, the payroll accountant will likely lose their job. The ethical path would be to not pay the vacation time, but inquire if the company offers employee assistance programs that could help. Objectivity is about keeping your judgment free from personal biases or conflicts of interest. That can be difficult at times for the payroll accountant who has friends within the company. An example of compromised objectivity would be a payroll accountant who receives a request from a close friend, an employee, who alter their time card or approve excessive overtime hours. If the payroll accountant gives into this pressure, it could lead to payroll fraud and significant consequences for the company. Due care and competence are about ensuring you have the skills and knowledge to accurately perform payroll tasks. For instance, if a payroll accountant fails to update the payroll system with new tax rates or regulations, the company may face tax penalties and employees may not have the proper deductions withheld from their paychecks. This shows how important it is for payroll accountants to stay current with laws and regulations through continuous education. Professional organizations like AICPA, IMA, and IFAC, the International Federation of Accountants, provide frameworks to guide payroll accountants through ethical challenges. For example, a payroll accountant who violates the confidentiality or objectivity codes may face disciplinary action from their professional organization, which can impact their career. By adhering to these codes, payroll accountants ensure they make ethical decisions that benefit the company and its employees. Payroll accountant is a highly ethical field where confidentiality, professionalism, and integrity are critical. Ethical lapses can result in significant financial, legal, and reputational damage. By adhering to professional standards and ethical guidelines, payroll accountants help ensure the success of the company and protect employees' rights.